Forex scalping. Are you kidding me? Hi, it's Charlie giving you your midweek sort of update. And I was just pondering, I'm actually recording this Sunday afternoon, and I was just pondering Forex scalping. And because I understand that, of course, for many people, they want action, they want to be able to trade, multiple times a day. And I'm not saying that you can't make money from for scalping markets because there's always going to be a small number of traders who can, but the majority won't be able. So I'm going to give you some of the reasons why I believe you can't make money, not in the long run from forex scalping. So one of the main reasons that if you're trading off of a 2 minute chart or a 1 minute chart and you're scalping for a few pips here and there, that's in essence what scalping is. Then, and let's assume you use stop losses. Now, a lot of scalpers don't use stops, but let's assume you're using stop losses. So let me bring a pen up, and so let's assume you've got into a position here, and it's a buy, let's say, and you've got a stop loss here. So maybe your stop loss is 5 pips. Okay, oops, put a 5 in there. So it's 5 pips is your stop loss. I'm going to give you some information as well in this video about if you do want to scalp, maybe there's a slightly different way of going about scalping forex. We'll talk about that as well. So let's say you've got a 5 pip stop, and maybe you've got maybe a 5 pip stop target as well. So your target price is around about 5. A lot of the time with scalpers, they actually have inverted risk rewards. So it might actually be only, let's say, 3 to 5 pips start target. Okay. Now, the problem that you have is that even if you have a relatively high win rate, so 60, maybe even to 70%, one thing that is going to happen, or there's a couple of things that are going to happen, and one is spreads and the other is slippage. Okay, so slippage. All right, now if you think about it, okay, so if you're in a trade and just when you've either placed a trade or even when you're trying to exit your trade for a profit, the spread's widened, then of course when you're buying and selling, so if I've got almost like a deal ticket here, so your buy is usually on the right hand side of your ticket and your sell is on your left hand side of the ticket. If the spreads have widened, then it means that the sell price is going to be that little bit lower. So you've got up to your target here, but actually the actual price that you actually sell at is just that, maybe half a pip less than what it's showing on the chart. So the chart will be showing that you've hit your target and you exit, but your actual physical exit is different to what the chart says. So that's what you get with spreads. So it's slightly widening of spreads. It might have been that just at that moment, for whatever reason, that spreads have widened out. It can be any reason for that. Now, before anyone says, "Oh yeah, but I use a fixed spread broker," well, if you're using a fixed spread broker, that means you're trading with a market maker, and market makers have a vested interest in making money from you losing. So don't even go there as far as there's nothing wrong with having a fixed spread broker, but especially for scalpers, then they're not going to like scalpers, because scalpers will say, well, yeah, I'll go to a fixed spread broker. Yeah, you go scalping along with a fixed spread broker, and then you'll start finding yourself getting requoted a lot and all of those sort of things that go on. They make it difficult for you to get the execution that you want. Okay, so the other thing is slippage here. So, and you can get slippage on your stop losses. So you might have, even if we'll talk about traders not trading with stop losses, but let's say you do use stops and you've got a 5 pip stop loss, but let's say on some of your trades, it's not going to be on every trade, but it's going to be on enough trades where you'll just get that little bit of extra slippage. Might only be a few pipettes here and there, but they add up because that's natural. You're not always going to get stopped out at your actual exit price. You're going to get extra bit of slippage. It could be that the spreads have widened out as well, so that creates slippage on your stop loss. Now, do you imagine if you've got a 5 pip stop loss and you, for argument's sake, I'll make it easy on myself, you get a 1 pip slip on your order, so you actually get exited 1 pip lower. Well, that's 20%. That's a 20% increase on your stop loss. And so you can start doing the maths as far as, you're getting stopped out and an extra 20% or even 10% or even 5% regularly on your stop loss is going to add up on your losing trades, but also it's going to bite into your winning trades as well. Because if you're not quite getting those pips that where the chart is saying, okay, bank your profit, but your actual exit over here when you hit the sell button gives you slightly less, then you're having slightly more on your losers when you have losing trades. So you're having slightly more on your losers, but you're making slightly less on your winners as well. Now, all of this so far is assuming that you're using stop losses. So let's go now into, well, okay, a lot of scalpers don't use stop losses because they're sitting there in front of their screens. And I'm going to give you a solution on the back of this as well, so-called solution, but something to consider anyway. So where was I? So let's say you're sitting there and you're saying, well, Charlie, doesn't matter to me. I'm sitting there, I'm glued to my screen when I'm in a trade, and so I don't use stops. I have a mental stop. You hear this all the time. Oh yeah, I use a mental stop. So I have my entries here, my level that my exit where I'm going to physically exit the market is going to be down here. But I don't actually put the stop loss in. Okay, because people feel like their brokers know where their stops are and all of that sort of stuff. Now, again, what's actually going to happen is that you need a tremendous amount of discipline in order to actually exit at that level. Because what happens quite often is price starts coming down. It might actually then start to breach your mental stop loss level, and then and it's a natural human reaction that we start to think, oh, maybe I'll give it a little bit more room. I'll give it a little bit more room to breathe, and then I'll exit when it comes back up. And that will work a fair amount of the time. That by not actually having a physical stop loss in, and then even if it does go beyond it, and you don't have that discipline to exit, it very often will come back up. But you only need those few where it comes down. You decide not to come out, and it just keeps on going, and then you're in real trouble, because all of a sudden what was just a simple little scalp trade becomes a big old swing trade, because you find yourself you can't exit because you're just hoping that it's going to come back up, and it goes down, and then it consolidates for a bit, maybe doing a bit of a retracement, and then goes down again. Bit like looking at this chart here. I've got a 5-minute chart of the euro dollar from Friday up, and you imagine, and this will be a reality, there will have been a lot of people all around the world who will have at some point been buying the euro dollar because so many traders don't use stop losses, and then as it's come down, they may have even bought more, because that's another thing that short-term traders might do, hoping that it's going to bounce, and then they just don't, and they just keep on going. And then all of a sudden, what started as a normal day in the office becomes an absolute calamity. So what can you do as far as being a scalper is concerned to make money? Now, I'm a believer that I think very, very few people, like I've said, who scalp the markets actually do make money in a sustainable way over a longer period of time. Anyone can do it over a short period of time, but ultimately something's going to happen. It's mentally quite fatiguing, and then it's only a matter of time before your discipline will all go out the window, and then you'll have you can make money for a period of time, and then you'll just give it all back in 1 day or 2 days, and it'll all go. So that's the reality of what goes on, because it's so mentally. It's such a strain there. So, but as far as execution's concerned, anyway, so if you're trying to get better execution, if you're hitting, if you're just trying to buy and sell at market, so you're literally just buying live, using market orders, then market orders are always going to be more susceptible to slippage. Okay, so one thing you can do is, if you've got a style of trading, is to use a limit order. So whereby you're trying to limit the price to a given price. So if price has been going up and then you've got a limit buy order to buy at this level, then you might stand a better chance of getting better execution at that point. But the main point I'm going to say here is, if you're trying to avoid too much slippage, is actually go to the Forex futures markets. So trade Forex futures. You will still be susceptible to slippage. And there are other issues with Forex futures, like in stock index futures. You don't always get filled with the number of contracts you want to get filled at, depending on liquidity at that time. And so, but certainly with Forex futures, if you're trying to trade that way, then at least if you're using limit orders, you're less likely to see slippage if you're using limit orders there. So that's just something to consider if you're still, if you're still like, oh no, Charlie, I've got something here and I want to pursue this, because bearing in mind, your average market maker broker doesn't like scalpers. They don't like people being in and out for a few pips here and there, because you can very quickly take money off them. They know that in the long run you're likely to lose, but in the short term, that can happen. So Forex futures could be a solution depending on obviously on the style of trading you do. And because just bear in mind, if you're trading with a market maker type broker, they're going to have a vested interest. They'll make it awkward for you. You'll start getting requoted on your trades when you're trying to get into positions. You'll find that you're getting your spreads are getting widened. You'll find that there'll be slippage against any orders that you might have as well. So it's not just about the trader themselves. You've got the market to deal with as well. And this is why if you go up the time frames, it becomes less important. Let me give you one final example before I leave you to it for the day. And that example is what I just said about stop losses. So imagine you've got your scalper with a 5 pip stop, like I said, a 5 pip stop, and they get slipped a pip, which is 20% on their stop. Okay, now if we take someone who's got a 50 pip stop, so that someone's trading off of a higher time frame with a wider stop, and then they get a 1 pip of slippage. Okay, so they get 1 pip of slippage. So the same amount of slippage, but this is the thing with traders who are trading with off of higher time frames, things like slippage and spreads widening become less important, because all of a sudden that's only 2% of as an extra cost. So the scalper, or the very short-term trader who's trading over smaller time frames, is seeing a 20% extra on their stop loss, which, if you're 20% extra, if you're risking 1% per trade, let's say you are doing something like that, all of a sudden you've lost 1.2%. Okay. Now, if you're over here and you're more of a sort of semi-swing type trader with a 50 pip stop, then you're still risking 1% per trade, and you still get slipped, because that's a natural process. It's a natural thing that happens in the market. But instead of it costing you 1.2, it's costing you 1.02. So it's marginally the slippage is costing you only marginally more. So someone who's got wider stops, they can deal. It's not the impact of spreads widening and slippage is much less of an impact on that type of trader than on an out-and-out scalper. So, like I said at the beginning, though, there are scalpers out there who do make money and have done so on a regular basis, but I think they are very, very few and far between. From my conversations with brokers over the years, brokers actually quite like scalpers, because scalpers make them a lot of money, and that's more of the reality than anything else. Anyway, as always, appreciate your feedback. I'm sure I'm probably upset a couple of people today who's saying, no, I scalp Charlie and I make loads of money. Well, that's great, and if you are, but I'm just going with the overall statistics of what the reality is for most people out there. By all means, give us a thumbs up and do subscribe to our channel if you do like these videos, and it keeps them coming into you whenever we publish anything new. Take care for now.